I was watching a video on YouTube, as you are right now, on the mistakes I've made as an investor by Darren Jackson, and he really shared some great stuff. On another note though, you should check out his channel because he dives into great detail on investing and some names that you can consider, Hylian and Shill being a big one. I think he just put out a video on that today. But anyway, I wanted to get into the mistakes I've made as an investor, and oh boy, are there some. Welcome back to the channel. I'm Jacob Fisher, and today we are talking about the mistakes I've made as an investor, as I said before. So while we get into it right now, you guys should go tap that like button and let's go. First and foremost, we have day trading. This was easily my biggest mistake as an investor when I was just starting out. While I learned a lot, like how to spot companies that you shouldn't invest in, I also pretty much put a ton of stress on myself for no reason. From being down hundreds to up hundreds to blowing up accounts with money that I should not have been trading with, I eventually made it out barely green and stopped day trading until I could actually create a stable investment portfolio that would increase in value year over year. That and getting a job also provided a stable income. A couple things that I learned from that are I should have invested the money in safe names back then, because had I done that, I probably would have been up a couple 100% and my portfolio would be even bigger than it currently is. It's not very big right now. So I did also learn that FOMO is a terrible thing and you should never buy into names that are up hundreds of percent or even 50% on the day. It's information like that where I avoided the Bitcoin crash and I'm still overall green on the Bitcoin trade that I made. I never bought in at 20K like some people I know. In fact, I bought in at 10K and sold around 18K, so go me, right? It's definitely taught me some things, but definitely don't day trade without a stable job, stable portfolio, and without proper training or practice. Moving on to number 2, we have something that came up recently, and that was focusing way too much on the dividend yield of a stock. It took me quite a bit to see a 10% dividend yield and not invest in that name because I was like, oh, I want to get 10% dividends a year. That's guaranteed. What do I need? $1 million and then I can have 100K to live off of by doing nothing? I mean, that sounds incredible, but what I failed to realize was that the underlying stock was actually not going to increase in value at the end of the year, or at least not very much in value. My $1 million would have given me 100K, but I would have lost maybe 10K in value by the end of the year, depending on the stock. Up 90K overall, but why not invest in growth stocks that would increase my portfolio maybe 20% a year, or Apple being up 80% in some years, so my $1 million would be worth anywhere from 1.2 to 1.8, rather than that little amount with dividends. It's not to say dividends are bad. I mean, Apple offers a dividend, but it's much lower because they invest so much more back in the company. I've switched most of my portfolio to growth stocks because I want my money to increase in value more over time, and I don't really need it, so I don't need a dividend income right now. Though once I decide that I want a dividend income and to live off of that, then I'll adjust the portfolio accordingly. To put it in perspective, a portfolio that grows 20% a year for 20 years, investing $12,000 a year or $1,000 a month, could leave you with $3 million at the end of 20 years. An interest rate of 8% per year would leave you with only $630,000 at the end of the 20 years. While I know the stock market average rate of return is 8% a year, investing in QQQ the last 20 years would net you on average 38% a year. So it's not impossible to consider numbers like that rather than the 8% a year that you might get out of some dividend stocks, or less with high dividend stocks. Number 3, and I promise this last one will not be as long as the first 2, is just to invest more. I wish I had invested so much more and maybe even worked more to earn more and then invest more while I was in school. I was lacking when it came to investing early, despite always paying attention to the stock market. Any internship or birthday money I received, even $20 a week, I wish I had invested. $20 a week is like, don't buy 6 drinks when you go out, only buy 2. So that's not too bad. Over 8 years, investing $20 a week at a 10% return would net you about $13,000 at the end of it, which, doesn't really seem like a lot, but saving just cash $20 a week would be $8,320 at the end of 8 years. That's an extra $5K you would have had just by saving money. I am sure starting early is something every investor wants to do, but seriously, just get out there and do it. Open a brokerage account as soon as you can and start investing. Robinhood is fractional shares, so you can invest $5 a week into SPY and just enjoy it going up. Doesn't need to be too much, but definitely start early. I'd have to say those are my 3 largest mistakes. Of course, I've made mistakes like don't get too attached to stocks, don't invest when stocks are up, FOMO, which I guess I felt to a little bit when Nicola was having good news and then the CEO left like the next day and I lost a bit. But other than that, I mean, the 3 things I wish I could change are day trading too early, choosing growth stocks, and investing more earlier on. Last bit sounds a bit cliche, but it is true. If you can invest just $5 a week or $20, you can really make some good money early on. And then I always wish I had an extra $5K lying around just with the growth of my stocks. That would be so nice. Maybe I'd buy a drone or just keep it invested. Let me know what you think of these ideas down in the comments below. I'd love to know your thoughts and maybe the mistakes you have also made as an investor. I upload videos on Monday, Wednesday, and Friday on travel and finance. If that sounds like something interesting to you, make sure you subscribe down below. Thank you so much for watching, and until next time.